This is Zam here with a weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 30th of July. Starting off with the FTSE 100, we're decent close to the week, but not quite the 77.60 February resistance line break that we might have liked. We get through that, then there's a possibility of a new leg to the upside the rest of the summer, up to that March resistance line projection, which is basically the top of that broadening triangle from that month. But on the downside, got the 200-day moving average rising quite sharply now at 75.80, and above that we're looking for the breakthrough 77.60. If we break back below the 200-day line, then it's back to 74.50 and that June resistance line break that we had a couple of weeks ago. The other point to note is that if the 50-day line, the blue line there, starts rising, we'll be in the run-up to a golden cross, which tends to be the strongest part of the cycle, so something to look forward there. On to the DAX, and the DAX closed the week right where we would have liked it to close, i.e. through the May-June resistance, and that leaves us looking for the top of that rising trend channel from back in August as high as 17,200 to be hit by the end of this August, hopefully. On the downside, I suppose old resistance, 16,200 from earlier in the month, becomes new support, and then the 50-day line there at 16,000 probably should cap any or support any pullbacks that we may have. Moving on to the Dow, and here, amazing that I suppose we're seeing this market lead the pack, even though the Fed raised interest rates during the week. We got a support line there from March. That was an old resistance line target, 35,200. Above that, we're looking for the top of the rising trend channel from last August, as high as 37,300 by the end of next month. Obviously, we'd like to get through recent resistance around the 35,600 area to then push through to 37,300. On the downside, worst case at this stage is 34,500, which was June-July resistance. So if we pull back, that would be the expected area to do so. Moving on to Bitcoin, which has been disappointing over recent weeks. Here we were looking for this market to push through the 32,000 zone to head to the top of a rising trend channel from back in June last year as high as 36,000. So far that seems to be delayed. RSI below the neutral 50 level 44, which is not great. That suggests there could be a follow-on push to the downside after the July peak earlier this month. Around the 27,600 area would be old June resistance, but can't rule out a move down to the 200-day moving average, 26,600, ahead of any potential move to the upside. The level that needs to break on the upside trigger would be that resistance line there from the middle of this month. That's currently running around 29,600, so an end of day close above that could be the first hint that we're moving higher. Otherwise, probably if you want to be more safe, then it would be an end of day close through 30,000. But at least so far, the market is hugging the 50-day line in a decent way, and that is still rising. So we might get away with the recent lows being the low ahead of a move to the upside. Onto the stocks, and quite a few, because we've had a pretty boisterous week in terms of rises. Aferian is the first contender, and here we've had the shares deliver a bear trap reversal. In fact, it's a bear trap island reversal, so we gapped down back in June and then gapped up during the week. That suggests that we'll have at least an initial target here at 19 pence at the top of the June triangle, and then hopefully up to as high as 25 pence, the upper parallel of that triangle, as soon as the end of next month. At this stage, only back below the 50-day line, around 14 pence would even begin to worry us. So great setup there with that island bear trap reversal. On to Blackbird, which has been obviously on the back foot for quite some time, or had been until the last week or so. Here we've broken a line of resistance from December. We had bullish divergence going into the breakout there, so that breakout level 7 pence. And above that, we're looking for 12 pence, and ideally we wouldn't head back below the old March-April support area at 8 pence in the meantime. So above 8, looking for 12, hopefully by the end of next month, or hopefully a bit sooner, actually, the way things are going. Onto a stock which I haven't covered quite some time. It used to be quite a mover, but sort of become relatively pedestrian in the recent past, but that might change now. We've had decent turnaround, which has taken many months, and the unfilled gap to the upside in May has been extended. We had a gap higher back in, well, the end of that month, and then a further consolidation, positive consolidation. Since then, the sideways shuffle just below the 50-day line suggests that we're ready to at least head up to 18 pence, which is a line of resistance from back in June last year, and then hopefully up to 20 pence or 21 pence by the end of next month. But then unfilled gap to the upside, the second in the recent past, is a pretty encouraging setup and should hopefully deliver 20 pence or more for Blackbird. Don't want to see the shares back below the 12 pence area in the meantime. On to CapEx, which is currently tussling with Tesla. Here, even though we've got the claim delayed till the end of the year, the shares have decided that that's good enough, and we've hit our initial target there at 2 pence, above 2 pence, looking for 3.3 pence, the upper parallel of that triangle, from June as soon as the end of next month. Also, a gap close buy signal at the end of the week, so we closed above the top of that gap from May, around 2.25 pence, which is also a positive for the technicals. On to Destiny, which has been a steady performer over the last week. We had an unfilled gap to the upside to start that week, and bear trap gap reversal. In fact, there's a second gap in the recent past in July, so that's even more impressive. Hence the massive move to the upside above 47 pence, which was our initial target. We're looking for at least a retest of the 2023 resistance at 61 pence by the end of next month. Ideally, we stay above the low 40s, so 42, 43, ahead of a potential move to the upside or further move there. Another beautiful chart is on the way in the form of Great Southern Copper, and here we had unfilled gap to the upside, bear trap gap reversal at the beginning of the month, and the shares have hit the initial target there around 2.1 pence, above 2.1, looking for 3.5 pence by the end of next month. And bullish divergence line there from way back in January, helping the cause as well and backing the momentum there. Stock that I didn't really want to look at, but here it is anyway. Iconic Labs, obviously been a slightly difficult situation over the recent past. What's interesting here is that the shares have managed to break a line of resistance from the end of February. That was around the 0.03 pence or 0.003 pence. And above that, and the 50-day line, we're looking for the shares to nearly double, really up to that March resistance line projection at 0.007 pence by the end of next month. Obviously, back below that 50-day line would not be such a good look. So let's see if this rather problematic share can obey charting rules. Stock which I've been meaning to cover for quite some time, but didn't quite get round to it, is Jersey Oil and Gas. But it looks as though this is the right time, in the sense that we've broken out of that falling wedge in place since May at £1.62. Above that, the initial target, obviously the 50-day line, 184, which was we're obviously nearly there, but hopefully as high as 220 and the 200-day moving average by the end of next month. If you are cautious, I suppose you'll be waiting for an end-of-day close above that 50-day line. And in terms of support, I don't really want to see the shares back below 169 now, which was resistance on the way down. On to another problematic stock, Mirriad Advertising, again, not one for widows or orphans, but here we're just breaking a line of resistance from June. That's around the 1.3 pence level, but we really need to break through the resistance on the way down around 1.75 pence to really say that the stock is finally recovering, even though we've got bullish divergence there. And the latest price action does seem to be like a bear trap situation. On to decent stock which doesn't have such issues, Oncimmune, and here we've had the shares gap up on Friday. They gapped up above the 50-day moving average there within a broadening triangle. The current situation, well, it's actually the second gap in a week, so that's also helpful. Current situation is we're looking for at least a move to 29 pence, which is a resistance line from the start of the year. But the real fireworks would start here if we break above 29 pence, then the target could be as high as 50 pence by the end of next month. But the real kicker, the double unfilled gaps to the upside so far this month, that is pretty impressive. Another stock which is looking pretty impressive is Shield Therapeutics, and here unfilled gap to the upside, so bear trap gap reversal. We had that gap there through the 200-day line a couple of weeks ago, and the initial target then 10 pence, above 10 pence. We're looking for 14 pence, and actually probably much more, actually, given the way that both the 50 and 200-day moving averages are rising in the run up to that golden cross, which should be on its way in the next week. It tends to be the strongest part in the cycle, but looking good there at Shield while we're above 10 pence. Onto the aquis market, which somebody has to look at, I suppose. We've got TAP Global here, which is proving to be a decent situation over the last couple of weeks. Good recovery for the second part of July. And U-shaped bull flag breakout. That suggests that we should at least head up to 3.6 pence at the top of that broadening triangle from back in March. It was rather strange that the shares came back so much from those February peaks, given the fundamental performance at the company at the moment. Stock which is looking to progress, I think, on a technical basis is Tekmar. Friday saw the share just breaking a line of resistance there from February, around 12 pence. Above that, we're looking for the shares to hit the top of a rising trend channel from December, as high as 20 pence by the end of next month. And the added bonus at the moment is the way that both the 50 and 200-day lines are both rising towards a golden cross, which we'll hopefully get within the next couple of weeks. But the key here, probably holding above the 10 pence level, which is recent support, and obviously the low area of Friday. Star of the week, from my perspective, was Upland Resources, largely on the basis that the shares did what they were supposed to do from a charting perspective. We had an unfilled gap to the upside at the start of the week, and breaking that gap up day around 0.64 has unleashed a very decent move. Initial target was 0.95 by the end of next month, and obviously the shares have done that by the end of this month, just in time, above 0.95 on an end-of-day close basis, looking for 1.5 or 1.6 now by the end of next month. Hopefully the shares will stay above the old January peak initial 2023 resistance at 0.83, and ideally they stay above 0.95. Just a couple of stocks to go now. First one is Versarien, which has obviously been a slightly difficult customer over the recent past. But what's interesting here is that we closed the week with a gap close buy signal. So we closed above the top of that gap there, first gap there from earlier in the month at 1.74. So we just managed to do that. There is another gap there, top of that, rather the floor of that, the low of the day there, 1.98 pence. So if you're fussy, you might want to see that closed as well. But above the 50-day moving average here at 2.1 pence, we're looking for as high as 4 pence as basically a gap close, a double gap close buy signal on the daily chart. Looks a bit like a W-shaped reversal as well, but obviously one has to be cautious and really want to see the shares remain above 1.5 pence, the floor of the gap, before just in case there is a setback for the stock. Finishing off with Zenova, and here beautiful double gap bear trap reversal. So gapped off the low at the start of the month, another gap, and then the sideways shuffle above the 50-day moving average. The view now is that while we're above 4.25 pence, looking for up to 7.5 pence by the end of next month. So a beautiful turnaround there with that double gap reversal on Zenova. That's it for me today. More updates during the week.